Okay, welcome to my quick take on the market. If you go back to 2009, you'll see QE1, QE2, Operation Twist, and QE3, or actually, you can go Q1, 2, 3, 4. Okay, so the market, remember, we've never had a recovery. It's been a propping up of zero rates. Low rates is what can peak in QE. Has been keeping this market going up. And the way they do that is that as long as they can keep interest rates near zero by by buying treasuries, which they did over $4 trillion, then the rates will stay low. And then the 85%, remember the wealthy, 85% of their income comes from the stock market. So that's what moves the market up. We never had a market move or recovery in the market because the Main Street folks never recovered. Their entire net worth is tied up in wages and their house. Well, they lost their house. About 12 million houses were wiped out. They went to foreclosure. Those people are now renting, most of them. They never got their equity back. Remember, they're pulling out $2 trillion in equity between 2005 and 2007. They lost all that equity. Then their house was foreclosed on. So when we hear how we've had this big recovery in the stock market, no, we haven't, because again, the Main Street never recovered. Their equity is gone. They're now renting instead of having a home ownership. Main Street. The recovery was strictly for the very wealthy, who 85% of their income comes from the stock market. We're talking about the 1 percentile and the 1/100th of 1 percentile. So I just wanted to show you, though, when they started out with QE1 right here, that's how they stopped the market from collapsing by injecting $1 trillion. And then every time you notice when the market starts breaking down, again, there's QE2, broke down here again. QE, what they call it, instead of QE3, they call it the twist. They changed the name. And then they did another QE4, which they call QE3 right here. And each time, okay, each time they did this, there was an injection of money. That's $3 trillion. Then they started again with all their stock buybacks. And you can see when the market started to break down again. Well, what we're having right now is one of the biggest breakdowns is right here. This is a huge breakdown. This means the internals in the stock market are breaking down. And you can see, as long as you have a nice trend where the trend is nice and tight going up, like here, you see that nice tight trend right here, nice tight trend right here. See, when these trends are nice and tight, okay, that's when everything's going well. But you can see we have never had such a mess. And this means the internals are breaking down very badly. And so right now, they have to do another QE. They got to lower interest rates. They already stopped rate hikes on the short-term rates, and they've stopped the rate hikes from going up on the 10-year Treasury, which affects your 30-year mortgage, and also affects the interest we pay on the national debt. So Trump already stopped all that, because he knows it's in trouble. If you look over here, if we extrapolate it, this is what it looks like. If you see this peak right in here, let me just show you right here. If you see this peak right here, that's this peak right here, okay? And you can see this is the key right here. They could never break back above this 280. They tried and had a breakout point failure. So you can see what's going on here. So that's why they've got to lower interest rates. It's going to be very difficult for the market to go higher. Earnings aren't there. So this market, the sentiment wants to go much lower. So in the next couple of weeks, next couple of months, keep your ears open for a announcement from Powell that they're going to do another QE. Because if they don't, this market is going to collapse, and it's going to come all the way back down to where it started right here. I will see you on the charts.